following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the May 6th fantastic Friday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure that we have an extraordinary one. Of course, let's have an extraordinary weekend as well. And you know the easiest way to do that. It's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of the bulls and the bears, the buyers and the sellers. We're going to go figure out what they're communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in. Would love to hear from you at 877-927-6648. Of course, internationally, 727-445-1044. Let's go ahead and get this show kicked off on this fabulous, fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, we have the Dow trading up 15 points. She's trading at 17,675. S&P is off 2. NASDAQ Composite down 10. Russell 2000 is flat. The DAX closed up 18 points. The FTSE closed up 8. Gold's up $22, trading at $12.95. Silver's up 25 cents, trading at $17.56. Light sweet crude up 46 pennies. She's trading at $44.78. Leading the charge here to the upside, you've got Amazon up $9, Priceline up 9, about 9. Herbalife up 6. Google's up 6. Randgold Resources up 5. To the downside, you've got Teva Pharmaceuticals off $29. That's a little over 3%. Allergan down $20. Imperva down 12. That's 27% to the downside. Copacabana Holdings, that's off about 18%, down $11. Endo International down 40%. That's straight out at $15.91. All right, so let's go take a look at these markets, figure out what they're doing. Now, the market I would say we keep our eye on here is the Dow. Before we go take a look at the Dow charts, let's take a look at Apple. I don't know the weighting of Apple inside the Dow. Maybe somebody in the den knows that, but we know that it's, I believe, well, I don't know anything for sure. Actually, I might be able to find out here if I do this. Let me see if I do this, unless somebody types it into the den earlier. But let me see if I can, come on, work with me here. If I put in diamonds, this might go ahead and tell me which weighting Apple might be. And I think I got to write these guys these signals. I think this tool here is not working. 17%. All right, thank you. So we got 17% weighting inside of the Dow. Appreciate that. Now, why do I bring that up? Well, if we take a look at Apple with its weighting inside of the Dow, what you've got Apple doing right now is testing that August 24th low. Let me pull this chart back. Let's turn off these profiles, and then you can see exactly what it's doing. So today, it looks like you have an official test of that low, $92. We've gotten down to, Apple's gotten down. When I say we, why am I saying we? But Apple got down to a price point of $91.99. $91.99. It needed to get to $91.99 in order to effectively test the low of August 24th. Now, that August 24th bottom had a volume of 162 million shares. Today, you're at 23 million shares. There's also another hammer candle out here. Not another hammer candle. There's a hammer candle from May 2nd. That price point is $92.40. You're trading at $92.41 right now. That had volume of 48 million shares. If I do a little straight line math here, I think it's going to fall short. What do I mean by short? Well, first let me punch it in. 23.8 says that's about 44 million potentially today. It was, yeah, that would be light volume. So you could have Apple reject 2 or 3 swing points, quite frankly, because it would be rejecting the swing point from January 28th as long as it closes above, let's make it see. That was 92.39. This one is 92.40. Let's use the 92.40. If it closes above 92.40 and you're at 92.40 right now, you'll have Apple with a triple bottom, a quadruple bottom type test out there. We're going to say a test of the lows. We can't really call double bottoms. We can't call anything a double top or a double bottom until we see what happens at the previous swing point out there, because it could just simply be a consolidation. But I just want to make sure that we're trying to be somewhat accurate with regard to the expressions and the words that we use out here from a technical analysis standpoint. So why are we looking at this? Because it's actually the Dow that is the indice, and we'll take a look at it on 3 different time frames out here, that is communicating to you and I that the market wants to bounce. And if the Dow is going to, in fact, do that, it needs some help from Apple with being a 17% weighting inside here. So now let's switch from Apple, right? And what is the number one weighting out there? AG inside of the Dow. I apologize for not having that handy and at my fingertips, but I need a wingman or wingwoman to assist me with that. It's a team effort, anyways, right? So now let's go take a look at ExxonMobil. Okay, is Apple number one? So Apple at 17% is number one. Is that what you're saying, AG? Okay, well, how about that? Number one weight. Now, so imagine if Apple wasn't struggling, what the Dow would be doing. Now let's go take a look at what the Dow has done. Let's start with a 30-minute chart out here. I think I have one of the patterns already in. Yeah, I've got one of the patterns already in. That's coming from this high that began at 5 o'clock in the morning. This is yesterday, Cinco de Mayo. So from 5 in the morning down to the low that occurred at 9 o'clock this morning. What we can see, if we just start counting, we start doing our wave counts to the downside, you'll see you got to wave number 7. That was confirmed at 9:30. Okay, so that often can be a point. It's a point where you want to be paying attention to what's going on. It completed an A to B equals C. If we take a look at that, you got this nice little shooting star out here. This was at about 2 o'clock in the afternoon. That looks like maybe that was on May the 3rd. So there's your A point. Your B point, this little piercing candle down here at about 2:30 in the afternoon. We come all the way up to where we started our last wave count to the downside. You can see a 1-to-1 A to B equals CD pattern. Now, you really didn't get the reversal signal till right here at 11:30 this morning. And at 11:30 this morning, let's go ahead and get rid of here's what you can. Now, let's do this. Let's switch charts. We'll switch to a different 30-minute chart that's easier, I think, for you to see when we take a look at the market profile. So we want to do that, right? We're just fending our way through, navigating our way to help understand what the market is trying to do as we speak right now. Again, we're taking a look at intraday. So here are the 30-minute profiles out here, and we can see that prices, now this is different than the ones I had on my system. We're going to go with these here as being the ones that are most accurate. So just simply populating it, and you can see, there we go. And now I think we're back to square one. So we can see here that see this little. Let me turn the price off just to make my point out here. So we'll turn price off and we'll come back. Take a look at the current profile. Forget about the weekly bottom out there. No, that's the weekly 17,553. That's the weekly point of control, the center of its box. But I want you to pay attention to the red one, the 30-minute chart. That's what we're looking at out here. And this was really set up as a bearish bias. Bearish bias because that point of control closer to resistance than it is to the support line. So getting above that is very positive. Now, where is it that the Dow is likely to bounce to, especially if we get this rejection of the bottom here inside of Apple? Well, the answer would be 17,695. That would become our target. That happens to be the bottom of the daily box out there. That may be the extent of the move. But when we come back from this break, let's continue looking at the Dow. We'll switch from the 30-minute to the 2-hour to the 5-hour. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Hey, we've got the current, if you watch us on Tiger TV, you're looking at the actual current weighting of the components inside of the Dow as of last evening. So quick correction there. Apple being a large weighting inside the Index 100. Inside of the Dow, it's right really kind of in the center, almost in the center. It's number 13, a 3.6% weighting structure inside there. So number one is 3M, number two, Goldman Sachs, 3 IBM, then Home Depot, United Health, Boeing, McDonald's, Johnson & Johnson, Travelers, and Disney, making up the top 10 out there. So let's not, with regard to the Dow, let's not overdo it with regard to what it might want to do. Nonetheless, we took a look at Apple. We know what it's doing out there. Let's shift back over here. And so what we've identified as far as a price target, if in fact we see the market continue to move higher, let me turn the price level on here, that we should anticipate that the price range is about 17,695 inside of the Dow. Now, Dow futures is what I should say. If I switch over and take a look at one other thing here that could be a resistance level. So let's look at this. I want to see if there's a descending trend line. Yeah. So there's a descending trend line out here inside of the Dow on its 30-minute chart. Probably could have gone back to the other chart out here, but we'll just take a look at this. And so what we can see is that this little trend line that began back here at April 27th, that as we speak right now this 30-minute session is not over for another 11 minutes out here. But this is the first time that we're seeing this level get pierced out here. Now, we've got the daily profiles not turned on this chart here, but this shows a much larger trend line that is all the way up here at the 17,890 type area. So we'll want to pay, we'll look at this in about 9 or 10 minutes, hopefully, and see if, in fact, the Dow is able to close above that trend line. You know, and I'm not seeing anything that says that it shouldn't out here. And the ES Mini looks like this is headed to about the 2050 level, and you could get a bounce up to about 43.26 inside of the NQ out here. Now back to the Dow, because this was the 2-hour chart out here was one that was giving the biggest signal that it wanted to bounce. Waited for me to come on the air so that we could probably do all this, right? And we take a look at price moving lower out here. This is a 2-hour chart moving lower with less relative weakness out here. That's that little black diagonal line going at the bottom of my screen. And when you take a look at that candle that was formed during that time period, which was at 10 o'clock, so a 2-hour chart from 8 to 10 a.m., that was not just a bullish engulfing, it was also a key reversal candle out here. So that was the candle session that was saying, hey, I want to move to higher price. We can see on the 2-hour chart, and this candle doesn't complete until 2 p.m., 17,594 is a level that if it closes above, that's also short-term bullish. Does it change the daily trend? No. We're looking to, could it change the daily trend? Well, of course. Things always are going to start in shorter-term time frames, move their way up, and then eventually it affects the daily. As we speak right now, no, the daily is still in a bearish type position. We'll take a look at a couple things. Now, the 5-hour chart, just to prove that, or at least to prove to ourselves, right? I'm not trying to prove anything to you. The market proves to us, we are the ones that have to take a look at that information, assess it, and go ahead and take action. Massive action out there. Now, here, let's take a look at the Dow. Now, the Dow 5-hour chart out here. What it did this morning at 9 a.m., it looks like that's what it's going to do because this candle that we're in right now finishes at 2 p.m., when the Dow made its most recent high out here, and this is coming off of the lows from about 5 o'clock in the afternoon, right after the contract close on April the 7th. So from April the 7th all the way to a high that was put in here at 5:15 on April 20th, it made a 7th wave move out here, right? 7th inning stretch. Now, from that same high to the low that came in here this morning, guess what? 7th inning stretch to the downside. So we have a 30-minute chart. And we see a resistance level that should have held. It did not. It has now failed. Short-term bullish. We've got a 2-hour chart that has one of our favorite patterns, as does this 5-hour chart. This 5-hour chart here has got really 2 of our real favorite patterns out here, right? And we can see that price right now is bumping right up into Stevie's black line out there. Forget about the red line. It's that black line at about the 17, we'll call it 17,630 for lack of, because it's hiding behind a number out there. I could tell you what it really is here if I get my data box. There we go. It's on a different screen, but let me see. That number exactly is, well, I'll get us pull that down, son of a gun out here. I was speaking to myself. Now, that black line, that number is, the reading you want, 17,622 is the number, 17,622. It closes above 17,622. It'll have broken through another level of resistance. That resistance would also say you're looking at 17,702 out there inside of the Dow futures. So you've got the same type of, actually, this is a better, you have better patterns right now that have occurred this morning than we did up at the most recent high out here. So you've got 3 charts. Now, the daily chart for the NQ, let me go find that little booger out here. Let's put this up on the screen. So the daily chart, let's see what it is communicating to you and I. The only thing that it's communicating to us as we speak right now is that it's in wave number 4. And that wave number 4, you can often get a reversal out here. The level to be watching from a daily perspective is going to be 17,695. 17,695 is the bottom of the daily TAS market profile. If the market is really biased to the downside, that level should act as resistance. So you were at 17,620. It is not unthinkable, should not be unthinkable, to see another 75-point move, at least the upside, and to see if that holds as resistance. What happens if it doesn't? If it doesn't hold as resistance, the next level to be watching is going to be 17,875, and then we'll just simply have to go from there. But you can see we've got, 3 charts that clearly show that it wants to form some type of bottom out here. Now, it could be a bottom that lasts for, today is what? Today is May 6th. It's a bottom that could last for a good 10 or 11 days out there. So it is a bottom worth paying attention to, and that is in the Dow. So, and then we spend a lot of time there because you'll see if I go take a look at the other charts, we'll look at the ES Mini out here. I didn't get that same type of patterning. I mean, I didn't get that same type of patterning. And I take that back. We did get a key reversal out here at 10 o'clock this morning on the 2-hour chart. No follow through on the very next session, but we're getting some now out here. 2046 looks like that's going to be, a resistance zone out here. If I take a look at the 5-hour chart and pull that over here, it shows up as 300 minutes on our screen. Right now is when we're getting the confirmation. So in the Dow, we got an earlier confirmation. Well, no, I take that back. We're getting both the same. out here. Price moving lower. You've got a nice big old bullish engulfing candle as we speak right now. This shows us that 2051 level, 2052, is a key level of resistance. You get above that and another 10 points to the upside would be its message out there. Now, let's go take a look at the advanced decline oscillator inside of the Dow. Let's go see what message that is giving to you and I. And that is still below zero out here, and says that it is the sellers that are still in control. But we have to be very careful and watch. I believe that the message with regard to whether or not the market is going to turn really comes from the Dow. Not from the NQ, even though that's been weak. All the heavy lifting right now being done by the Dow. So right now we've got the Dow. Speaking of it, it's up 25 points, 32 points, trading at 17,692. The S&P just slightly positive out here. The Russell slightly positive. The NASDAQ composite off about 5. Steve Rhodes with TFNN. Great.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 24. We got a couple callers on the line. Let's go to Max in Fort Lauderdale. Max, thanks for calling. Thanks for holding. You have some questions about my charts?
Yes. Good afternoon, Steve. Yes. To understand your charting a little more, the horizontal lines that you call point of control and everything, what are they derived from? Volume, time, price?
Well, they're not. It's not time sensitive. So when we take a look at, let me go ahead and put up a daily chart out here. Give me a moment. They derived originally from the futures market out here. Guy by the name, if you want to do some real research on it, you can go ahead and Google Stottlemyre, and he'll give you all of the math behind it. What I want you to be able to take from it. So, are you watching this on Tiger TV?
Yes, I'm a little bit you're behind.
Okay, no problem.
If you post a chart, you're going to have to give me a few.
No, that's
few
okay.
seconds
That's
to
okay.
fix it.
Well, tell me something that you trade. Is there anything specific that you trade? That way I can make it more pertinent even
No.
to... No, nothing
No,
specific.
I just shotgun it.
Okay, all right. So let's look at the ES Mini as we speak right now, and I'm going to go ahead and so these market profiles are what's nice is that any time frame chart that we look at, to the right it's basically each bar represents, in this case here, a day, or a 30-minute chart represents time. These market profiles are not time sensitive whatsoever. They can go on for a long period of time, but what they help you to identify and do, I'm going to turn price off right now. What they help you to identify, and I'm going to go ahead and turn off the weeklies, which are colored green right now. They really help you to identify lines of support and resistance. They also give you this little center line. Now, the reason that mine are all blue on the screen right now is just simply because I put multiple market profile timeframes on one chart. So even though it's a daily chart, I can have multiple time frames. That way, I understand where things are at on longer term and shorter term time frames out here. And the way that these work, the way that you would use these is to help you to identify where buyers and sellers are positioned. If you are a seller of the ES Mini, you would be focusing on the 2097 says 0.65, but you can't actually do that. So 2097.50, 2097.75. That is where sellers should be lined up. So in a battleground out here between bulls and bears, that's where you should expect to see some resistance. If you wanted to sell the ES Mini, you would be looking for price to get right up there. Where buyers and sellers are most comfortable happens to be that little point of control area. That is where the largest volume is. It's like driving down I-95 in Fort Lauderdale. I bet you can tell me the intersection that always has traffic. And on a stock chart, in this case here, right now that congestion zone is at that 2082 level. Now, a nice way that you can use this is when that congestion zone is closer to either the top or the bottom of the box. That really gives you the bias, as to my opinion, it gives you the bias as to what to expect with inside that box. So the prior box that I'm looking at right here where my cursor is at, which was really between April 5th and April 20th out here, this was telling us that really this was a selling-based bias out here, just simply the proximity. Proximity is power. And in this case here, with that point of control being closer to the top, that really should have acted as resistance. And when price got above that level, right here on the trading day of April 13th out here, that told you if you were short, you were wrong. One of the things that John Logan, who creates the market profiles that we use out here, or that I'm using on these charts, one of the nice things that he created was it helps you to eliminate at least one side of the trade. So when you break above a level of resistance out here, you really should not be short if you are going to go ahead and use market profiles as one of your tools. Likewise, in this case here right now, we can see that the ES Mini is down below the daily bottom of the box. That should have acted as support. 2 days ago, once that level was broken, it was tested, it was rejected. Yesterday was a perfect test of trying to come back up to a level of old support that is now resistance. Tried to break back in there, could not do it. It got up to yesterday, the high was 2097.65, and the the high yesterday was 2060, and the bottom of that box is 2059.75. I mean, it is a classic test out there. So does that help answer your question?
I have some questions. I have some questions. So the bigger boxes are derived from pivot points.
No, I mean there are I can't express to you right now with the math all of the mathematics behind it. Okay, so you are looking at volume, you are looking at it is accounting for time and price, yeah. So it is accounting for that. If you were to put pivot points on the chart, you're going to come up with different levels.
Well, then it's we'll say the majority of it is is time and volume.
Mm-hmm. Well, what you should do, what you should do is, because what I'm trying to teach you to do is really how to trade with them and the meaning behind them. But what you should do, because it is a very long and involved. There's a paper on it. There are a number of videos, and like I say, if you just simply go Google Stottlemyre, you'll be able to watch hours worth of information on it. And if you are a mathematician, then you'll really understand what's behind it. Now, what John Logan has done, so better you should actually call John Logan's show, because he'll tell you maybe the nuances that they have created, because I don't believe they use the exact. I think they have found additional ways to improve upon the meaning of the market profiles that are provided out here.
Because I understand market profile.
Okay.
Actual market profile charts. And
okay.
I'm trying to figure out how the lines, how they go with a market profile chart is what I'm trying to. Unless it's his own market profile.
Well, it is their own proprietary market profile. There's no question about that.
Okay.
But the way that you trade with them is really like I would describe to you, during the first few minutes of the conversation, is watching where price is at with inside the box. You know where buyers are supposed to be lined up. You know where sellers are supposed to be lined up. And what you have is, if you really pay attention to that point of control, its proximity to either the top or the bottom of the box, that will really help you to eliminate one side of the trade when price meanders beyond that level. And this will simply help you. And when new profiles appear, if in the long trade here, as new profiles are appearing and they continue to form at higher lows and higher highs out there, that's also helping you to understand the trend that's out there and the importance of the trend. But once you start breaking below a market profile out here, it helps you to eliminate one side of the trade. And right now it says to eliminate the long side of the trade with regard to market profiles. There may be other things that are out there that say, hey, the market is going to turn. This is also going to be a lagging indicator. So when it's outside of the box, when it's going to go ahead and make a turn, it's not going to be an advanced warning system. It is a lagging indicator.
Okay. On your white back charts, you have a red line. What's the red line?
The red line is a proprietary tool that I've developed to help me understand exactly where price is at and to eliminate one side of the trade, being long or being short.
Okay. Thank you.
You bet. That was Max in Fort Lauderdale. When we get back from this break, we're going to go speak with Garo in California. We're going to take a look at one of his favorite stocks, which is Visa, ticker symbol V. We'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 10, S&P is off 1. We're going out to California to speak with Garo. Garo, thanks for calling. Thanks for holding. How are you this morning?
Very good. Thank you, sir. How about you?
I'm doing well. Nice to hear your voice. You want to take a look at one of your favorite stocks, Visa, ticker symbol V. Tell me what you're doing, how I can assist you.
I'm waiting for a bottom at this stock, and for some reason I have a hunch that Visa will double itself by end of this year. I don't know why, but that is I convinced myself that this is going to happen, and I have no way of proving it. All I want to know that you think that this has built a bottom here on a daily chart, or it's going to go hit the 50-day at 76.02, or by looking at the weekly chart, it's not in a very good shape because the stochastic is being curved down, and the 50-day on a weekly chart is $73.91. What is your idea regarding this stock?
Sure. So a couple things that we can take a look at. So what Garo's trying to do is to find a bottom, is to identify a bottom. So let's go assist him with some levels that we can take a look at. So one of the levels that he identified was the 50-day simple moving average. And as he said, it's priced at 76.02. Right now, as it's updated on the chart, it's 76.01. At that 76.01 level, since that is one of your first targets, what I would say is between that 50-day and 75.66 would be a first level that you would be paying attention to. The bottom, and the reason why I choose the 75.66 is that happens to be the bottom of the TAS weekly box out there. So if there is support, if you're looking for a bottom, that would be the place that you would like to look. Now, as I turn the profiles off, and I turn off the 50-day, we're going to go, even though I know you don't use volume out here, I still want to use volume. I want to see where price actually broke. And when I take a look at where price broke, for me, what it looks like is this little gap that is out here on the trading day of March 30th, when this thing broke to the upside. Now, the volume right there is only 9 million shares. And when it was pulling back on the 4th of May, just a couple days ago, was coming back with about 8.8 million shares. So it was pulling back with a bit more volume. Ideally, you'd like to see it come back into that breakout area, you know, with less than 8 million shares out here. But that would be the first place that I would look for a bottom inside of Visa. If I take a look at
weekly chart.
You mentioned a weekly chart. Yeah, you mentioned a weekly chart. So let's look at the weekly chart. So the weekly chart shows that, there was a B point on an A to B equals CD that originally we were looking at. That was from July 20th. It happens to be that high is 76.92, right about where it's trading right now, and the volume there was 59 million shares. And on a weekly chart, you've only done 33 million shares as we speak right now. It's trading into the last really up-thrusting volume from March 28th. That's got 45 million shares, so it is pulling back with light volume out here. On the weekly chart, we were looking at those weekly profiles as well. And so the weekly chart says this could be a spot, but ideally, you'd see this get down in that 75, 66 area. But, is that you are looking at this as something that might, your intuition says that this could double over a period of time. So are you looking to still trade this intraday, or are you looking at this from a longer-term hold?
This time I'm going to keep it. I'm going to buy 500 shares. I want to wait at the weekly chart to come at $73, $74, and stay there for maybe 5-6 days. And from there, whenever it starts to take off, then I'm going to buy.
Got it. Okay. So you're at the $73 because you're waiting for the for that dot on the parabolic SAR to get hit.
Yes, sir. Yes, I'm waiting for the dot.
Yep.
So,
okay.
I believe in that dot, and it did so much miracles to me. So I'm waiting for that dot to.
Uh-oh, did we lose Garo? I hope not. Well, so folks, if you watch us on Tiger TV, Garo, I hope you're still there, or I hope we're still live on the air. I believe that we are. What he's looking for, so on this weekly chart out here. Yes, he is. Okay, still there. So, folks, if you're watching, so I'll try to make this just a little bit larger for you. That way, even though we've got this high def TV out there, let me see if I can make that a little bit larger for you to look at. There you go. Now you can see it looks like a plus symbol on here. And what Gar was waiting for is for a price to pull right back into that dot. But then that's not going to be his only trigger. He's going to want to wait to see this thing take off to the upside. Is that correct, Garl? I can't hear him. I'm sorry, Steve. I don't know if there's a problem out there. I think we've got that. And here's what I would also say on the daily chart. Okay, so on the daily chart out here, our last caller, John. No, it wasn't. We had Max in Fort Lauderdale. Was asking me about a couple proprietary lines that I have on my chart, and in this case here, when that red line crosses down through the black area, which it did a couple of days ago, that is a bearish signal. You can see the last time that we saw that same type of crossover was back here on December 8th, and we didn't get a positive bullish action until about February 24th. All righty. I hope that helps you out, Garo. Thanks so much for calling. Let's go to John in Manchester, New Hampshire, to take a look at the GLD. John, thanks for calling. Thanks for holding. How are you?
Good, Steve. Thank you very much. Actually, it was gold in general. I didn't hear that, or I might have missed if you touched on gold earlier on, but can I change it to Nugget, NUGT?
You can.
If also
so
gold, yeah.
Yep. So in essence, we've really got to look at both. So in the case of Nugget, trading up $12.80, up 13% today. Tell me what you're looking at while I take off a couple of these things on my chart.
Yeah.
Or what do you,
I'm wondering if it will continue upward.
If it will continue upward. This is an I've got the weekly chart on my screen. No wonder it didn't look correct to me. Okay. So will it continue upward? What I'm going to do is let me come over and take a look at another chart out here. I'm going to put this one on my screen out here. And when I take a look at this, the level of support, I've got the GDX. Son of a gun. Oh, I know how I can do this. Give me a moment here.
Sure.
Bear with me while I try to organize things just a tad here. So right now, here's what we know about Nugget. Let's take a look at what we know today. Nugget was moving, made a high out here on the trading session of May 2nd. Did it with 7.5 million shares. Pulled down with 6 million shares on May 3rd, yesterday or 2 days ago, 9 million shares to the downside. And today, you're bounced with 6 million shares thus far to the upside. So just simply from a volume metric standpoint, it's doing 6 million shares. We've been trading for about, 4.5 hours, pretty close to 4.5 hours. Says it's going to do about 8 to 9 million shares to the upside. We know that it is trading into its most recent swing point. So in order for this to say that it wants to move higher, what you want to see, John, is you want to see this close inside of the low of the trading day of May 2nd. That low is 109.15. And again, the volume there was 7.5 5 million shares. That is a swing point. When you move into a swing point with volume, which it looks like that's what it's doing today, with it being able to do about 8.6 million shares, that would say it would go test the high at 123.96. Even if it closes below that level, says it would at least be back up there to test the 109.15 level. We've got to go to a break. Go ahead and stay on, and we'll come back and take a look at it when we get right back.
I'm all set with that. Thank you very much.
Alrighty. Steve Rhodes with TFNN. We'll be right back, folks.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you can earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. We caught me right in the middle of trying to update a chart out here. Come on. There we go. All right. So we've got the Dow. It's up like about 20 points or so. You know, as we take a look at this chart here right now, the chart that we're looking at, primarily used to identify what's going on with the advanced decline oscillator. That's the bottom portion of the screen for the New York Stock Exchange. That's the lower left. Then right next to it, the NASDAQ Composite, the Dow next to that. And then to the right, you've got the S&P 500, and below that, the VIX index. And if you take a look at the chart here for the Dow, you're going to see that today's candle as 154 is a hammer candle. Now, we've seen some hammer candles inside the Dow, the S&P. In fact, in the Dow, you've got another hammer candle that is forming. Let me blow up the Dow. Remember, the Dow is the one that I think gives us the more important message out here. Here was a hammer candle that formed on April 29th. The low of that session is 17,651.98. You're back above that level right now. It was only pierced by just a few pennies out here, I believe, believe, on May 4th, and then you think you were back above it yesterday, with a little doji out here. So we can see that the market is really just trying to hammer out a low, which you and I know to anticipate this, right? The normal 84-year-old historical analog says sell in May doesn't get going right out of the gate. It says it has an initial move, which in this case here took place on the 29th. That's the 20th was actually inside the Dow when it formed a high out here, and it has an initial move to the downside, and then it gets people lackadaisical thinking that selling may only apply to May versus a 6-month type of and it's really not a 6-month, as you and I know, because the bottoms form when? That's right, sometime around October 13th or so out here. So it's a sell in May. Make sure that you're ready to fire your bullets away between the end of September and the early part of October out here. But you do have a nice little bullish hammer as we speak right now. Don't know what the day's candle is going to look like when it completes out here. Inside the S&P, you've got the same thing. Of course, the levels to be watching inside the S&P 500 again, and I can't harp on this enough, is going to be that 50-day exponential moving average of the VIX index, which is 1584. You're trading, it's 1580, yeah, it's 1584, and you are trading right now at 1535. I thought I was seeing something. So when you are below the 50-day, which we have seen that 50-day hold as resistance out here. You close above it, says we're going to 1711. You would expect, I don't care if it's a hammer candle or anything that forms out here, you would expect price to continue to fall in the marketplace until we get up and we see what happens at 1711 out here. But again, just trying to piece this thing together. You got to be, you don't have to anticipate anything. I'm anticipating that the market is trying to form some type of viable bottom out here. In the market, and that could last for as I said, 10, 11 days out there, calendar days. Steve is here's a message inside the den. Let's see. Steve is a close below or close to 92 in Apple will confirm 10 more points down. 10 more points down in Apple, I would think, is what the question is out here. So if we take a look at Apple, it's traded at 92.13. We know that if it closes below $92, it becomes a problem really to interpret out here. And the reason that I say that, I'm going to put the weekly chart up on my screen. What I would say is this: I would say the logical price area would be $85. Which is, well, it's not even 85. It's not exactly 85. Let me actually draw the correct Fibonacci retracement lines out here from low to high, and then I'll give you a number out here. So the number that I'd be looking for is 85.39, because what we know is that low of $92 would be taken out with light volume. There's no way it's got the volume on the daily, on the weekly, on any time frame out here. So I would just target 85.39. Folks, stay tuned. Our man David White is up next. I have a great weekend, and I look forward to seeing you on Magnificent Marvelous Monday. Thanks to all the callers today, and we'll see you soon. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.